you have to understand the order flow in order to expect when a fair value gap is going to work or fail. And so if you're expecting for it to fail, then when price closes through the consequent encroachment of it, for example, that's already an indication that it could fail. And then you can find a long opportunity. But the most common method that people use to execute on them is mostly a return into the after closure below. So like if you were expecting this to be inversion and to trade higher, then this would be your entry on it, this down close candle here. And you'd have to have your stop. I would personally put it just below whatever swing formed before. So buying this and just put the stop in here. Okay, and so we'll see if this can expand up into toward the buy side. ES still respecting that BISI there very nicely on the 5-minute. So dropping through it, coming back to the midnight open, totally fine. But look where the candle bodies are closing. Closing in the upper portion of the inefficiency right there. And all respecting the midpoint. All right, and now we're trading back above this one here. So we want to see candle closure back above that. And then work up into the buy side. Equal highs up here. Buy side above this high. And buy side above this high. All right, and here we go on NASDAQ. Starting to work off of it. Back up above the BISI right there. Close above the consequent encroachment. Okay, very nice. And back above this inefficiency here. Okay. ES is starting to work higher. We're seeing new displacement on NASDAQ. We're trading through premium arrays. That's good. So now I'd want to see price work back above the 10 a.m. open. And form a new inefficiency here. I don't want to see it close this in. Five seconds left. Okay, very good. Closing at the high end. And then we can work off of that. And then here's your breaker right here. So price can work within this price range. Right there. To trade higher. See how manipulation occurs under the midnight open? And then distribution off of that. Okay, small inefficiency here if price is to return into that. But ideally we want to see closure above the midpoint here, which we're seeing right there. Very good. Nice. So that can be a buy right there. And then you just want to watch for continued bullish order flow. So buying right there on the return to the inefficiency and inside the mitigation block. Stop can be down here because it shouldn't have any reason to return back below this area, which has already been traded back up through, back down through, back up through. Unless it's going to go lower, there's no reason for it to come back down here. So stop and go there. And entry would be right there on the return to that inefficiency. And then you can target the highs there and buy side up here. And we want to see this start to expand away out of the mitigation block right here, or out of the breaker, excuse me. Reach back up above 10 a.m. open. Okay, and like I said, we want to be watching to see, does order flow continue to show bullish signs, or are we going back against it? So it's still closing inside the inefficiency there. We want to see where this candle closes. Okay, price dropping into the BISI right there. And you want to see how the candle closes. See, that's very nice. That's an indication right there. We're closing inside the BISI. So like when I talked about it right here, this would have been fine for it to drop down into there, but you don't want to see it close back below like it does right there. Here, it drops back below. That's fine, but look where the candle bodies close, back inside that inefficiency. So when we trade back above it, this one used here, when we trade back above it, I want to see its support price. I want to see the candle bodies closing inside it and trading higher off of it, like we see right there. So it drops below into an inefficiency, but look where the candle body closes. And then we can continue to work higher. So now you want to see it trade up toward the buy side right here. And then reach up for these highs. And there you go, ES hitting the buy side right there, and then you want to see it expand up into the buy side up here. Okay, perfect. NASDAQ continuing to reach up toward the buy side. There you go, as it hits above the high. So an opportunity like this, we'd just be looking to take a partial above here. And then reaching for up here. All right, we'll see what's on the lower time frame, or 5 minute, 15, 5, 4, 3, 2. So just the 1 minute. So price really shouldn't have any reason to return back below this low until buy side is reached for. So that would be present another buying opportunity right there. If you can't take this one, that's another buy right there. Inside the breaker again, and you have it inside this fair value gap here, right around that 10 a.m. opening price. So now you're thinking about it in terms of the 4-hour candle. Right? If the 4-hour candle is to expand higher, then you have manipulation below the 10 a.m. opening price, and then it can distribute above it. So you want to be finding your opportunities at and below the 10 a.m. open. So the 10 a.m. opens right here. This opportunity was below it. This opportunity was below it. That's perfect. And then it can distribute up into the buy side. The entry and the model used for entry is not so important. What's important is the framework and the reason for the trade. Why should it trade from where it is to where you expect it to? Because there's a million ways you can enter. You can enter using the breaker. You can enter using this fair value gap and the mitigation block here. You can enter right there on the close of this fair value gap, right there. You can buy the breaker and the fair value gap right there. You can buy within this entire range using this as the mitigation right here. There's tons of ways that you can look to enter. The most important part is aligning yourself with the order flow and a framework that makes sense for where price can manipulate and then where can it distribute to. Does that make sense to everybody? So a partial could already be taken. It doesn't even have to hit the buy side for you to take a partial. It already would be at least a 1-1 on that. So you can take a partial up there. And just coming back to 830 open now, so still expanding this to, still expecting this to reach higher, but just allowing for retracements. Okay, it's just back inside the mitigation right here. That's totally fine. And you're watching for candle body closures. So referencing the 10 a.m. open once again. And then we'll want to see it continue to distribute off of that. Okay, 5 seconds left. All right, closing right at the 10 a.m. open there. And let's see if it can continue to expand higher off of that. Okay, and at this point on this trade, you can already have a partial taken. You can reduce your stop to here, as it shouldn't have any reason to return back below this low before going up here. And so now, at the very least, you're in profit, and then the rest takes a small losing trade. And so it'd be a profitable trade overall. And we're not jamming the stop loss up because we're allowing for retracements back into opening prices. But you see how we return to the 10 a.m. open there? And then we expand off of it. So talking about the silver bullet idea, you return into the inefficiency. This can be the silver bullet buy right there. Below the 10 a.m. opening price, this is a silver bullet right there, as it taps just the high of the fair value gap right there on this candle's low. That's your silver bullet, and you just take it to the buy side. Do you move the rest to break even now? No, I don't. I wait and see when price reaches the buy side if we've had any new inefficiency form within the range. So like here, we're forming new inefficiency on the 15-minute, and so price could trade all the way back down to this candle's high and continue to go higher off of that. And so I want to allow for it to trade into that and into the wick of this candle as well. And if I move to break even, then I could be stopped out prematurely. And so I could move it to here, just below the consequent encroachment of this candle's wick, but I wouldn't go all the way up to break even. Okay, and a partial can already be taken. It doesn't have to reach to the buy side for you to take a partial, but we are still expecting it to expand higher. Very nice. So partial must be taken right there. And then you'd expect for price to continue working up toward the buy side above. And again, it doesn't have to reach all the way here for you to take another partial. Sometimes what I'd like to do is take the whatever terminus you're reaching for, so like that, and then take it to whatever buy side you took your partial at there. And then you can just throw on your quarters of that range, and here's more areas where you can take a partial at. 56, 61, 66, and 71. So if I had 5 micros on this, I can be buying in here, stop below here. I could take 2 of them off, let's say right there, and then I could do 1 and 1 and hold 1 for up here. And note how I like to give the examples in reference to trading micros rather than minis. Because for most of the, I mean, you may have an exception in your case depending on, your own choices and whatever account size you're trading. But for the most part, looking at funded programs and those type of accounts, it doesn't make sense until you have a sizable cushion built up to be trading anything more than a few micros or up to 1 mini contract. And so if you're trading one mini, then you have no opportunity to scale out of your positions. And so you're going to put yourself in more of a position to make emotional decisions, because if you only have, let's say you have 1 contract on this, where are you going to close the trade? You could close it here and be content with that, but you're allowing emotion into the equation then, and to feel greed or fear of missing out as price continues higher up into the buy side here and here. But if you are to trade 5 or 6 micros instead of trading that mini, or even if you want to trade mini the same size, you could trade the 10 micros, then you're allowing yourself an opportunity to scale out, and you can capture a much larger portion of the range. Because you can take your partial here, you can trail your stop a bit, you can take another partial here, you can take another one right there, you can take another here, and then take your terminus up here. And now you went from capturing, let's see, 15 handles or so to about 40. Is this all making sense to everybody? The framework for this trade? Sweet. Yeah, nice one, Aiden. Close it early, first trade on exercises. Yeah, no worries. That's right. There's going to be plenty of opportunities throughout the week. There'll probably be better opportunities too. It's only Monday. Douglas, I found that buying 2 micros at a time helps as well. Holding 2 until your thesis plans out, and then add more as appropriate. Sure, yeah. If you find that works for you, then that's great. The general idea is that the more size you have on a position, the greater likelihood you're going to have an emotional attachment to that trade. So when you're learning and you're focusing on how do you capture a range, you want to just be focused not on the dollar amounts or the size, but rather what is order flow doing and how do you continue to participate in it as it continues to show bullish order flow. And the best way to do that is to trade micros, because you're not going to be making money on it. And the intention is not to make money. Right? All of this should be being done within a demo or paper environment anyways. And you can make very good money trading micros. If you capture a large range, like I mean, even 40 handles on a couple micros is pretty decent. But when you're putting yourself into a position where you don't have the opportunity to scale out, you're going to be emotionally attached to that trade, because you're going to have to think when price gets to here, oh, do I want to take my profit? I think it's going to trade all the way up to here, but what if it doesn't and I don't take my profit and it comes back to my stop loss? You don't want to be emotionally impacted by that. And so you're better off trading a few micros where you can take a partial, adjust your risk, take another partial, take another partial, take another partial, and you get paid on the way to buy side. See that? So we're still expecting it to trade up here. And ES has just reached new all-time high. So it can reach to up here next. Carson, let me invite you on. 1 second. I got to turn my headset back on so I can hear you. Thanks, Carson. Okay, and as you can use these quarter points too to continue getting an idea of the order flow as well. So if you're closing through that first quarter, that's a bullish signature that you can trade up to the next one. Closing through again, so we can reach to the next one. And then closure above this, it should reach toward the buy side. Does anyone have any questions about this trade, the silver bullet idea, the 10 a.m. open, low, high, close framework? Entry models, any of that sort of stuff? Thanks, Jed. I'm no wizard. It's just what it does over and over and over again. You spend time in the markets and you get an understanding of the order flow, and anyone can do this. You can all do this. So I look within my higher time frames now. So I'll go back to a 15-minute, and we could see very nice expansion away from there. You have this range here being this last up close candle that you could use as your breaker now. So if this is to continue seeing expansion through the buy side, it should accumulate within the range of this up close candle here. Okay, so it doesn't have any reason to trade back down to this low at this point. And it shouldn't really even need to reference back below the 10 a.m. open again, though it very well could, and so I don't want to jam my stop up in there. But we've taken lots of partials at this point. So after I'm mostly partialed out of my position anyway, so I'd be taking probably about, since we're trading with the long bias, the way I trade, I would personally take about 30% of the position off here, and then I'd be holding about another 30 or 40% up here, and then taking the rest off in partials along the way. And so since everything is mostly partialed out, we can go to break even there. So I manage the trades with a much looser approach to when and where to trail the stop up, because the way that I trade now is with a focus on capturing larger daily ranges, and in order to do that, you have to allow for retracements back into the range. Like if you look at a 5-minute chart here, you have inefficiency in here. So if you jam your stop all the way up in under this low, for example, if you're concerned about price making a retracement, then you're not allowing for that inefficiency to trade. And price can come into here and then continue working higher. So if you jam it all the way up in there, that's okay. You're locking in profit, which is awesome, and it's not going to hurt the growth of your account in that sense, but you're also not allowing the trade to work. So that's why when we have a range expansion like this, you always have to go back up into your higher time frames, like your hourly, your 15-minute, your 5-minute, whatever time frames exist above the time frame that you're trading on, and you want to see what new inefficiency has developed within that range, because all of this area is permitted to trade and still trade higher. And so I can't have my stop loss in here, or I risk it getting hit before the terminus is reached. Can you talk about standard deviation projection if there's only sky above us? Yeah. So we could look at a couple different projections here. Just if we're looking at a 4-hour for the start of things, then we could look at the lowest low up to the high. And here you go, your buy side is working toward up here. Project that out, and we get a half and 1. So if you're taking a partial through the buy side right here, then you can hold some for this level here, 105, and you can hold some for 39, and we'll see if those get reached. Okay, there's the buy side. So majority of the position can be closed at that point. And there's 37 handles on a Monday morning. Not too shabby. I can get used to this room.